Good morning, good afternoon, good evening, depending on where you are on the planet. And welcome to the Bull versus Bear Trade Day webinar for Tuesday, the 8th of February with Steve Miley on the call. Welcome, everyone. We're going to go through our usual regular run through in here today. Going to keep it fairly brief today, briefer than usual, guys. But there's not very much to add to what we've been seeing and what we've been talking about recently. We'll take a look at the charts, though. Certainly drill down into those. But on the data side, let's start with the data with the calendar as usual. There's nothing in here of importance. I've been doing this a long time, 30 years experience in investment banks, and I've not seen that trade balance data from the US have any significant impact on financial markets. So really not really focusing too much on that. EIA short-term energy outlook, obviously if you're trading, or you maybe have an eye on that, as well as the more importantly probably the API weekly crude oil stock data. And then we get BOJ board members speaking, but again, these are not going to affect, this Asian data. Australia, New Zealand data is not going to have a significant impact on the markets that we're looking at. So very light calendar. We said about earnings, Pfizer today, but earnings calendar really not going to be impacting us anymore. We've got all the big bulk of the major significant earnings that are going to impact on the major indices and other asset classes already behind us. Let's take a look, though. We did have one thing, so we had huge profits released actually from BP. They actually have managed to lift European stocks this morning, and that may be giving us a little bit of an upside. Also from the US side, we've also seen the euro still. So we mentioned Lagarde was speaking. So Christine Lagarde has tried to rein in interest rate hike expectations. So obviously from last week, there was a real feeling that there was a hawkish pivot from the ECB. But then comments from Christine Lagarde yesterday, we did flag that she was speaking yesterday afternoon. She said there was currently no need for major monetary policy tightening. Okay, so we saw a slight weakening of the euro on the back of that, and this probably helped European stocks higher, as well as that positive number that we had from BP in here today. But at the moment, when we're setting up and going into the day, stocks in here actually slightly dipped back lower since we've had that. Looking for that ECB put, again focusing on the EP, gradual data dependent. Those were the words that she said to soften the hawkish message from last week. So again, they're calling it the ECB put. So there's often been the talk of the Fed put. So basically the Fed always going to be there to back up equity markets, always going to be there to be on the more dovish side if things start to look quite negative. And then maybe we're seeing similar in here from the ECB, despite the fact that we have seen moves to higher yields, an aggressive move to higher yields on European yields and UK yields in here since the ECB and Bank of England meetings last Thursday. The Lagarde certainly stepping back, and we've already kind of mentioned that. And then on the tapes as well, Biden has said there will be no Nord Stream 2. This is the pipeline between Russia and Germany. There will be no Nord Stream 2 if Russia did invade Ukraine. And he was saying that when he was at a news conference with the German Chancellor, Olaf Scholz. So if Russia invades again, there will be no. Then there will be longer Nord Stream. I think that's a misquote. Then there will be longer Nord Stream 2. I think we will bring an end to it. So basically, there will no longer be. I think they're missing the no in there. And then when asked how we would do it, I promise you we will be able to do that. So raising the stakes a little bit in here, threatening obviously a sanction and the undoing of Nord Stream 2, but not really going into any detail. But whilst he was standing next to the German Chancellor as well. So that's certainly interesting in here. Let's go take a look at 5 things you need to know to start your day. So yields rising. So we've actually seen US 10-year reaching a high just close to 1.96% this morning. So lower prices, higher yields. And that's as actually European yields have moved in the opposite direction. 40% chance now of a 50 basis hike from the Fed in March. as being started to be priced in. We had Macron meeting also Ukrainian president and also Putin yesterday, and had a long dinner at the at the Kremlin. Nothing really advancing, but kind of the fact that they are trying to move things along. Look, an agreement possibly seeing the country export oil again before the end of the year. So in here, that did have a negative impact on oil in here. Peloton, we're not going to go into details on that. Not really impacting what we're looking at in here, and just really a recap of what has happened in the markets overnight, which isn't too much. Let's go take a look at the chart. Webinar will be brief today, guys. There's not really too much developments, since we spoke yesterday. So if we go and take a look at, first of all, we're going to start off on the stock indices. So it was an inside pattern yesterday. So if you look at this little pattern from yesterday, the daily chart on the S&P 500, inside and the activity contained within the previous day's session, right? So an inside pattern, that's a show of indecision. And even though we've broken down slightly lower, again, still inside. So inside Friday's session, okay, dip and a rebound yesterday as well, and then we are weaker in here this morning, but it's really not a big move. And the other thing is to note, really fairly narrow range yesterday. So yesterday we had the range was about 50 index points, I think. Yeah, about 50 index points in there, maybe a little more, which is about 1% range. If you look back here, we've got like 2% ranges from the end of last week, and back here like 2.5%, 3% ranges on the day. So if you look at that, the size of that bar compared to bars, we've not seen a bar since all the way back here, really, back in the middle of January, and so getting a bit calmer, markets kind of consolidating a bit. We have highlighted the lack of data. We've got nothing really until CPI. CPI is going to be the big data to watch. That's not till Thursday. We've still got Tuesday, Wednesday to get through in here yet. So market's probably going to be more in a consolidation mode, maybe slightly less volatility than we've seen of late. And if we step into the 30-minute chart, the market has dipped back lower. Look at the trend line we drew yesterday in here, guys. So that's a strong trend line, off the top in here. Since we had the rebound, so that's the rebound, the corrective rebound that we've seen. So this is back from just last week, from the 2nd, through the peak in here from the 4th. And you can see how the market flirted with it. We drew attention to this, maybe looking to buy on a break above this trend line. The market's, kind of broken and not held. We had a little pierce above there yesterday, and then a failure back lower. And then again, look, overnight in here, piercing that trend line and failing back lower. Now, obviously, at the moment, you can sell against that trend line, right? If you put in shorts yesterday against that trend line, they will look pretty good. So you can continue to sell against that trend line. But I think if we get a push above this trend line and hold, you can look, this is a 30-minute candle. So, the market on the 30-minute candle hasn't closed above that trend line. If we get a close above that trend line, now right now on this current 30-minute candle, that trend line is coming in around 44.87. If we get a close above there, or maybe the 30-minute chart or the 1-hour chart, then this is probably looking to turn around and base. Now, clearly we're fairly close to yesterday's low. Yesterday's low, 44.62 and 3/4. We're getting down close to that. If we can hold yesterday's low going into the US cash market open, if we can hold above that low, certainly want to be holding above this low down here. I think the opportunity is if we do break yesterday's low and we get a little flush down somewhere between yesterday's low and then the low from last week over here, the buy opportunities for a turning point here. If the market actually holds yesterday's low and we don't get the flush out, and we break above the trend line and hold, and then certainly above the overnight high. So the overnight high there is 44.96.5. If we can get above there, either a 30-minute or 1-hour bar close above the trend line, or a push and hold above the peak there at 44.96.5, then this opens up upside in here. Because remember, we've still got lower lows and lower highs. Now, with the first kind of the heads up that this down move that we're seeing from last week might be ending is, in the session of lower lows, lower highs. You did actually just pierce to make a higher high there and then failed. But the market hasn't made a new lower low. No lower low, no lower low, okay? It's tried to push lower, spike lower here, quick rebound. This was on the close last night. And then, again, trying lower, but, holding above this low. If we can hold this low in here now, which the market is at the moment holding above that low, if it holds that low, and if we get back above this high in here, it's starting to say that this is a base forming, and then that really opens up the upside again. So for me, it's still playing that from the long side. You've got a similar story on the NASDAQ. So again, inside pattern, relatively narrow range, a kind of a doji pattern candlestick yesterday, again lower in here today. We have undercut yesterday's low, so slightly more negative here on the NASDAQ, and we zoom back into that 30-minute chart, and we were playing around with the trend lines yesterday. Remember, we looked at this inverse head and shoulders, and the market went right up and fouled. You know, this horizontal line we've got across these peaks up here. The peaks are up at 14,825, 14,820 basically. So it needs to get above 14,825. Fouled there yesterday. There's yesterday's low. And then dipping into, remember we looked at this inflection area, these series of peaks in here from the basing pattern that we saw through late January, and now these series of lows in here. So we're kind of back into that kind of zone. Okay. Now again, we've just undercut yesterday's low in here just in the last 30 minutes or so of trading. But the market is already, not really accelerating lower on the break of the low. So we have broken that low, but look at the market here, no real impulsive move lower. Now, clearly the market's probably going to wait now till the equity market, the cash equity market open. You've got a couple of little low points over here. This one I think is going to be the next important one on the support side. So that's at 14,442. If we can hold above there and we get a turning point. Now, we have already broken these trend lines. There is an argument for maybe redrawing the trend line out here. Okay, so, we've definitely broken the trend line. But if we go back in and look to redraw and extend out, you may be looking for the break back above here, and then you got that little overnight swing here. So from yesterday, actually, not overnight, from yesterday. So that swing up there is at 14,727. If you can get above there, it'll also be above this redrawn trend line. And if it gets above there, so that's not the best trend line given it's been redrawn out here. It's not a great trend line. But and the market has broken these, the various trend lines. The one through here I just deleted through here, the one through here, and now the redrawn one here. I think that's the next trigger point is up there at 14,727. Certainly above the peaks up here. Again, it's kind of an elongated bottoming pattern in here now. So those peaks up there, as I said before, they're up at 14,825. Probably too long to wait for it to buy through there. Probably better to enter through that high there, or even the more recent high from the last couple of hours. That's up at 14,618.5. Now, yeah, we have undercut the low. I mean, whilst above this swing here, I'm still going to hang on to a positive tone. That's down at 14,442. If it breaks here, though, then I think it's quickly testing the low, and then you're probably seeing it a lot lower. So again, seeing how the market deals with the cash equity market open, which is in just under 2 hours time. So and probably until then, the market's probably just going to be oscillating, and probably it's European lunchtime. Probably not going to be too much happening for the next hour or so. So just looking at your setups in here, guys, I think just looking at your setups. Okay, let's take a look at the commodity markets that I know a lot of you guys also take a look at. Let's kick off with gold. Just make this bigger. So it's still in a bigger, choppier, broader range. Impulsive sell-off in here. At the end of January. The market's been in recovery mode since then, and a decent recovery yesterday. Very impulsive after Friday's indecisive candlestick in there. And we had a couple of times it spiked lower and rebounded. I think now we've got a little uptrend building on gold. Yeah, so it looks more like a more solid uptrend. We have had these spikes lower, and so it's been kind of tricky to trade. If we I'm not saying we're going to ignore the spike lower in here, but for the purposes of drawing the trend line in here, I think if we come and draw the trend line through here, trend line works pretty well through here. So look at that trend line there. It's working pretty well through there. Yeah. So it's kind of pierced it here. Then we get the spike down lower, back above, holding above. You could redraw that also a little bit in here. So I'll draw another one in here. Maybe draw it off of these lows. See the market's flirting with that one there, and then draw it for this low in here, kind of ignoring that spike. Because if you draw this trend line down here, it's no use to anyone. So, the market's now kind of trying to form a decent uptrend. We've got higher highs and higher lows, taking out that spike that we saw back on Friday. That was through the employment report. We got the spike lower and the rebound. And then the market, so I think playing this from the long side. And then if you come in, you can probably draw the counter trend. So in here, we're currently on the 1 hour. I'm going to just back off to the 30-minute. Okay, so you can still see the same trend lines there on the 30-minute. and they work quite well, those trend lines, and then putting the counter trend line on the 30-minute. So just off of these more recent little peaks. So maybe just waiting to buy on the break above that. And just thought the high from just this about 2 hours ago in here, you had a swing high up there. That was 1822.4. So a break above 1822.4, if you want to buy in before it breaks the actual high, that's probably the trigger there, or through the little counter trend line up through there. On the sell side, maybe down through the overnight low in there, which is, let me just make the data box a bit bigger. So the overnight low down at 1816.0, but I don't think, maybe for a very short-term flip trade, looking for a move back down towards the trend line, but then wanting to probably buy into it on this kind of this trend line, this lower trend line. So if you want to go short, I wouldn't short it until it breaks 1816. But for me, it's still playing gold from the long side. Let's take a look at OR now. OR has seen a sell-off in here this morning. Let's make this bigger again. So significant sell-off. Doji pattern yesterday, inside pattern, doji candlestick, indecision from another new high. We had the impulsive move higher at the end of last week. Indecision yesterday, and notably lower in here today. And if we step in now to the 30-minute chart on oil, so there's the impulsive move lower. It does look damaged now, but you look at we had the impulsive move lower, and then a decent rebound. Now, what I'd be looking at in here is how much of that rebound, from the impulsive move lower just from today, putting on the Fibonacci research. So you can see we'd got close back to 50%. If this can get back above the 50%, so half of the sell-off, it kind of starts to neutralize the sell-off, okay? Now, we do have a succession of lower lows and lower highs. This higher trend line in here is kind of working quite well. Probably redrawing this, given that, you can leave this trend line on, but I'd also put another one on in here off the actual high here through here, and that works quite well because the market comes up towards it. So one of these two trend lines is obviously going to be, if you're going to be a confirmation of a reversal back higher. But I think if you want an earlier entry on the long side, given that the bigger picture clearly is still in the bigger uptrend, right? Let's just go back to the daily chart, right? We know that, right? All right the way from December, we're in a really, really strong uptrend going back to December. And then I'm going to zoom in and look at this trend. So you got the accelerated trend, but you got this impulsive move up from. So when's that from? That was from the 24th of January. Going to zoom in a minute and look at that one from the 24th of January. But so you can see the bigger picture is still higher, right? And every time even when we've had a couple of days lower in here, we had a topping pattern tried to go in the latter part of January, didn't really happen. You look here, the roll lower, it doesn't last more than a day or so, right? So we had yesterday indecision, down today. Is this already time for the turning point for oil? So let me go back to the much bigger chart. I'm just going to zoom out to the 1 hour and just go for that rally from the 24th. Is this the 24th low? Yeah, there's the 24th low. So we'll put on the uptrend line and see how we're doing on defending that. So look, that's really, I think, important. So there's the uptrend line. So the market this morning, when we had the spike lower, goes down pretty close to that uptrend line, this bigger uptrend line from the 24th of January, and holds that uptrend line. I think that's really important because the market had the opportunity, obviously, with that big sell, it's got the opportunity to break this trend line and test the trend line. Doesn't even go down and test and rebounds from above it. And I think, stepping back into maybe, even to a 15-minute, I think we can get back above the 50% retracement, get back half of the sell-off we're seeing. From overnight, the overnight high there down to the low, this impulsive sell-off. If we can get back half of that, then that kind of neutralized. So this isn't exactly a Marabuzo. If we go into a 1 hour chart, it probably is a Marabuzo. So you kind of got like a Marabuzo candlestick in here, off the peak in here. Yeah, and on a Marabuzo candlestick, 50% is the key resistance level. We get back above 50% now. Obviously, we've fouled back from there, but this can get back above. So it's basically 90. The 50% is sitting right at 90. If you can get back above 90, then this starts to look, and we're trading 89, 67, 68 at the moment. So, if it gets back above 90, then this kind of neutralizes this morning's impulsive move lower. We've held the trend line. And then all that points to a move back to the top side for me. And then, you can go for either, you don't want to buy up here. So maybe when it goes back through the 50% would be to initiate maybe half of the position that you're looking to initiate through the 50%. And then the other, maybe through the swing peak, that we sold off from this morning. That's all the way up at 91.09. So maybe half through 90 and half through 91.10 to enter longs on the rebound. If it breaks the low down here and then starts to play with the trend line, then obviously there's a real risk of a deeper correction low, and you can play it from the short side. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day as ever. Please stay safe out there. I'll be back with you with another bull versus bear webinar on Wednesday. Take care. Bye.